The next business we're talking about is City Lodge, who owns and operates high-quality, affordable hotels targeted at the business community and the leisure traveller. It has recently stepped into the Kenyan market with the purchase of Fairview Hotels in Nairobi. The group has a market cap of 6.6 billion rand, a price-to-earnings ratio of 22.28 and a dividend yield of 2.72%. Now, City Lodge owns the properties that they manage, or the majority of them. So there's always this big underlying property asset.
Sure.
So when you look at a PE of 22 for a business that isn't exactly blowing the lights out in terms of growth, you do have to factor that in. I mean, when you look at these kind of fundamental analysis, that's obviously something you must consider. Do you think City Lodge is expensive on that basis?
Look, I think when you're looking at these businesses, you have to do one of two things, right? You either look at the operating assets and the cash generation from the operating assets, and you compare that to the underlying value of the properties. Now, you'd expect at the very least it must be a minimum of one of those two. You can't double count. If you take into account the operating assets and the cash flows and then add the property, you're almost double counting in your valuation. So you almost have to look at the minimum of the two or the maximum of the two to derive your value of the business.
And in terms of this company's strategy, now they are inherently conservative, but they're doing a big ramp up.
Sure.
So they've bought two hotels in Kenya,
Sure.
which, if you have a look at the numbers, the profit margins are almost 4 times what they make in the South African business. So that's very exciting. They're developing a hotel in Maputo. They're developing a hotel in Windhoek. They've already built one in Gaborone. They're looking at Uganda. There's a lack of hotel supply within the African continent, so they're wanting to tap that.
And given the traditional business of City Lodge, I certainly think that strategy will prove successful in the continent. They have traditionally slightly higher occupancy rates than Soho and Sun International, and benefit quite nicely from that. And it'll be interesting to see again whether they can replicate South Africa's strategy, high occupancy rates in those markets, and convert that quite nicely. As you touch on, the margins that they're making in the rest of the continent are quite healthy, so it makes sense that the expansion is geared in that direction. Having said that, the likes of Kenya, of course, we know the headwinds associated with the current turbulence in that market, and hopefully that doesn't impact tourism and travel in that region too dramatically.
I think if we have a look at the share price, that African expansion theme has definitely had a recent impact, because they released results a few months back and came out with all those plans, because they're quite quiet in terms of announcing these things. And within that results presentation, they announced all the plans to grow going forward. The only problem for me is I do like this business, and Clifford Ross and his team are extremely well regarded, but it's a sort of Mr. Price, you know what you're going to get, which I like and I have always liked.
Yeah.
But now you're getting sort of innovative online businesses like Airbnb and TripAdvisor coming in to compete with the you know what you're going to get type thing, because they're ratings now. Everyone's always concerned about how good your hotel experience is going to be. These kind of pooled online social media type websites give you ratings.
Sure.
And now you know what you're going to get from other people's experiences. So maybe that City Lodge model isn't as exciting anymore.
That's a very good point. Look, I think the likes of TripAdvisor in particular doesn't necessarily hurt their business model in particular, but Airbnb is a key challenge for all hotel groups. It will be interesting to see if that model or that app actually takes off quite successfully in the continent. Look, I think I'd be a little bit more concerned if they were going into some of the other slightly more developed markets from that perspective. I think there's still quite a bit of a leg room for them to grow before starting to hit those sort of challenges.
I'm going to Europe in October, and I booked my first Airbnb accommodation. Well. So hopefully, I guess the concern is that he cancels on you the week before, and then you have nowhere to stay, and it's during the Rugby World Cup. So hopefully, we'll see how that experience goes.
Yeah.
So you're hot on City Lodge, hot or not?
Look, I'm going to lean on hot on this one. I like the African growth story here. I think they'll do well. Very conservative business, as you touch on, and I suspect that the expansion will follow suit, which bodes well for them in the continent.
I must say I agree with you. I like the property element. So if you feel you're lacking a bit of property exposure, instead of going with the classic redefine or growth point, get a bit of City Lodge, because you've got the property underpin, and it does often track the property market, but it's got that extra flair. In terms of hotel expansion throughout Africa, you're going to get paid a decent dividend yield, and you've got a solid management team that's been there for absolute ever. I agree with you. I'm hot on City Lodge. We have had it in the portfolio before, but we don't at the moment.